Hi everyone, in this video let's discuss about the concept of accounting for branches including the foreign branches. Okay, accounting a branch can be described as any establishment carrying on either the same or substantially the same activity as that carried on by the head office of the company. So which means that without the existence of a head office there is no concept called branch. The head office means the principal place of business. Branch office are of great utility because it makes us closer to our client because of the face-to-face interactions that we have with our customers. This also ensures better accountability and control since the profitability and efficiency can also be tracked. For finding out the trading profit and loss of the branch, it is assumed the branch is a separate entity from that of head office. On this basis, a branch account is stated in the head office books to which it is the price of goods, service provided, or expenses paid out are debited, and correspondingly, the value of the benefits and cash received from the branch are credited. Let us understand the distinction between the branch accounts and departmental accounts. Under branch accounts, the branch accounts records can be maintained either on the branch or at the head office, while in the case of departmental account, it can be maintained at one place only. With respect to the apportionment of common expenses, there is no concept called as common expenses because branch is a separate entity for the purpose of accounting. Therefore, the apportionment problem does not arise. But in the case of departmental accounts, the common expenses are to be distributed among the departments concerned on some equitable and reasonable basis. Reconciliation. Reconciliation of head office and branch accounts is very necessary in the case of branch maintaining independent set of records at the end of each financial year or the accounting year. Such a reconciliation problem does not arise in the case of departmental accounts. But of foreign currency figures at the time of finalization of the accounts, conversion of figures from foreign currency of the foreign branch is very much necessary. But such problem does not arise in the case of departmental accounts because it is maintained at one place only. Now, moving on to the classification of branches, for the accounting point of view, it is classified into two types: inland branches and foreign branches. Inland branches are further classified into dependent branches and independent branches. Dependent branches are those branches for which accounting records are maintained at the head office, while for independent branches, the accounting records are maintained at the branch itself. Dependent branches. When the business policies and the administration of a branch are wholly controlled at the head office and its accounts are also maintained by it, then the branch is described as a dependent branch. So, the policies, it means that control and the accounting records lies with the head office. Branch accounts in such a case are maintained at the head office out of the reports and returns which are received from the branch. So, branch just prepares a like we have a diary entry, they prepares reports and returns and which are then given to the head office where the accounting records are maintained. Some of the significant types of branches that are operated in the manner of dependent branches are as below. A branch set up merely for booking orders that are executed by the head office. For example, we have some travel booking agency where only the agent collects the orders from the customer and later on sends the same to the head office where the order processing takes place. This is a first example for the first one. Second one, a branch established at commercial center for sale of goods supplied by the head office and under its direction all collections are made by the head office. For example, we have the shop outlets at the malls, right? It is a commercial center. Mall is a commercial center. So what they do is they just procure the goods from the head office and keep it there for sale to the customers, right? That is an example of branch established at the commercial center. Third one is a branch for a retail sale of goods supplied by the head office. That's like a Reliance Trends, Digital, which the outlets which we have. Now, accounting in the case of first two simple. Only expenses will be incurred which will be there in the form of returns and reports received from by the branch to the head office. Then the accounting entry will be passed to the head office. But in the case of a retail branch, it's essentially a sales agency that principally sells goods supplied by the head office for cash, and if it is approved, then if it is authorized, then it can also sell it on credit basis, right? So generally the cash is collected from the sales, either from the debtors or from the cash sales, as deposited in the local bank, just giving the credit to the head office account, and the head office then will issue separately the checks or payments orders for meeting out the expenses. So In addition, the branch manager is provided with a float for petty cash expenses, which is replenished from time to time on impressed basis. If, however, the branch also sells certain line of goods directly purchased by it, because it's purchased directly from other suppliers also, then to that extent, the sale proceeds will be retained by the branch to meet out the related expenses on the purchase related costs. I hope till this it's very clear. That means that if the branch is procuring some goods from a supplier other than the head office, then the sale proceeds with respect to such sale of goods will be retained by the branch, which will be used for settling out the expenses in relation to it or the purchase related cost. Okay, now method of charging goods to branches. It may be goods may be invoiced by the head office to the branches at cost or at selling price. In case of retail ones, at wholesale price. So at cost, generally the cost of production. Then at selling price, where the because at cost here will not include the marketing and selling expenses, because it is not, there is no need for selling or marketing expenses for the case of transfer between the head office to the branch. Okay, so it will be generally the cost of production. Then at selling price, we have three categories here, where the goods would be sold at a price by the branch, then which is suitable for a dealers of petrol, tea, ghee, etc. In this way, greater control can be exercised over the working of the branch, as much as the branch balance in the head office would always be composed of the value of the unsold stock at the branch and remittances or goods in transit. So only these will be the balances in the branch account. Maybe in the case of retail agencies, it may sell at a wholesale price so that some part of the profit will be booked to the head office and the remaining part will be booked in the branch office. Okay, so three ways with which goods sold can be charged to branches. Now, let's see about the accounting for dependent branches. Dependent branches does not maintain a complete record. So, actual accounts, that is double entry system of accounts, will be maintained in the head office, while returns and reports and some memorandum accounts will be maintained in the branches. Methods of maintaining accounts of dependent branches. If the goods are invoiced at cost or selling price, then we have three methods. One is the task method, second one is stock and task method, and third one is final accounts method. When the goods are invoiced at the wholesale price, then we have wholesale branch method. Okay, when goods are invoiced at cost. When goods are invoiced at cost selling price, we have three methods, right? Let's repeat it once again. The task method, stock and the task method, trading and profit and loss account method is final accounts method. The task method, it is suitable for small sized branches. Separate branch account is maintained for each branch to compute the profit or loss made by each branch. Okay, the task method will be suitable for small sized branches, and separate branch account will be maintained for each branch. If the head office has 5 branches, which all are small sized branches, then this task method will be of quite useful. Okay, if the branch is allowed to make small purchase of goods locally, as well as to incur certain expenses out of its cash receipts, it will be necessary for branch to supply a copy of the cash account, right? For this, which consists of the cash receipts and cash disbursements. Okay, for this it can prepare a small account known as proforma branch account. Proforma branch account. In this proforma branch account, the debit side will be of we will brought forward all the assets, and then 2 goods sent to branch account, to bank account, that is maybe for expenses, to profit and loss account in case of profit. Okay, by bank account credit cash remitted, by return to HO, because we have goods sent to branch debit, we will credit the returns to HO, and we will compute the closing balances of the assets, and if the net is a profit, then it will be in the debit side. There is 2 profit and loss account. If it is lost, by profit and loss account. Okay. Now, for this proforma branch account, what are the things we have to keep in mind? We have to keep 2 things in mind. Having credited the cash remitted directly, we will not provide again for the discounts or rebates. Cash remitted means it's not the cash sales amount actually, but the cash actually received. Okay, that's why it will be cash received will be net of the discounts and rebates, right? So we need not debate the discounts or the rebates again. The second one is that the accuracy of the trading results as disclosed also maintained, if considered necessary, can be proved by preparing a memorandum branch trading profit and loss in the usual way from the balance of various items of income and expenses contained in the branch account. Now the second method is that stock and detach method. The accounts of a branch are maintained under this method to exercise a more detailed control over the working of the branch. In debtors, we just prepare the pro forma, right? In stock and debtors method, we maintain some stock and debtors account. Okay, here if you see in the pro forma branch account, we are majorly focusing on the bank. Okay, that is mainly debtors. Debtors alone we are focusing, right? That's why in stock and debtors method, we will focus both on stock and debtors. Okay, the entries will be revolving around stock and debtors. Okay, other entries will be of less importance. So, branch stock account or branch trading account, assignment of shortage or surplus. What is the purpose of branch trading account? It is assignment of gross profit or gross loss, right? That is known as shortage or surplus. Branch debtors account, assignment of closing balances of debtors. Branch expenses account, ascertainment of total expenses incurred. Goods sent to branch account, ascertainment of cost of goods branches. Okay, branch cash or bank account, it's know about the cash flow, what are the cash received, how the cash was utilized, or how much cash was remitted to the head office again. These things have to be controlled, right? Branch fixed asset account, this is over the control over the fixed asset. Branch profit and loss account, to show the net profit or loss of the financial performance with respect to the particular branch. So let's see the accounting entries for this. Okay, cost of goods sent to branch account. Branch stock is debited while the stock of head office will be credited, right? Instead of that, we are crediting goods sent to branch account. Goods sent to branch account. Remittance for expenses. What are, we are going to remit, right? Branch cash increases, right? So branch cash account debit. Our cash goes, head office cash goes out. So to cash account. Any asset provided by the HO, branch asset will be increasing. So branch asset account debit. Asset account, head office asset will be decreasing. So asset account. Cost of goods returned by entry, branch stock account debit to goods sent to branch account. So reverse entry will be for returns. Okay, goods sent to branch account to branch stock account. Cash sales at the branch. Cash sales. So cash will be increasing. Branch cash account debit to branch stock account. Credit sales at the stock account instead of trading profit and loss account. Stock account will be showing us the surplus or the deficit, right? A shortage or surplus. So branch stock account will be in a way of functioning the branch trading and profit and loss account, trading account. Okay, branch stock account can be understood as branch trading account. Okay, then credit sales at the branch debtors account to branch stock account, return of goods by debtors to the branch stock account to branch debtors account, cash paid by debtors, branch cash account increases to branch cash account debit to branch debtors account, discount allowance, branch expenses account debit to branch debtors account, remittances to HO cash account debit to branch account, because we are remitting, head office cash increases, right? So cash account debit, our cash decreases to cash account. Branch expenses directly paid by HO is directly paying, so expense will be booked in since it's a dependent branches, accounting entry will be there only in where? Only in head office. So branch expenses account debit to cash account. Expenses met by the branch expense account debit to branch cash account. Closing stock. Credit of the branch stock account will be the value of closing stock at cost. It will be carried down as opening balance for the next accounting period. The balance of the branch stock account, if in credit, will represent the gross profit on sales and vice versa. Okay, and vice. If it is debit, that is known as loss. Okay. So other step, branch stock account balance will be transferred to the branch profit and loss account, because it's a gross profit or gross loss, right? We have to carry down the things to profit and loss account. Balance of branch expense account will be transferred to debit side of the branch profit and loss account. The balance in the branch PN will be transferred to the HO profit and loss account. The credit balance in the goods sent to branch account is afterwards transferred to the head office purchase account or trading account for the value of the goods transferred to the branch account. Till this, I guess it is very clear. Yes? Yeah? If I'm going a bit fast, please turn the speed some down. Okay? While watching. Yeah. Let's make it. Trading profit and loss account is known as final accounts method. Trading and profit and loss account are prepared considering each branch as a separate entity. Okay, like branch is a separate entity for the purpose of accounting, right? The main advantage is that it's very easy to prepare. So right? We're not confused about whether we have to debit head office or whether we have to credit something. We're not getting confused. So it is very easy to prepare and understand. It also gives a complete information of all the transactions. Complete is essential here, right? All the transactions which are ignored in the other methods. It is merely a memorandum account, and therefore the entries do not have a major level entry effect, will not be there. Just the memorandum account. Memorandum means just a draft or like simply an account. Okay, it does not have a proper ledger. Okay. Now, let's move on to this. When goods are invoiced at selling price, okay, when we are invoicing the goods at cost, we have discussed these under these three methods, right? Debtors method, stock and debtors method, and final accounts method. Now, moving on to when the goods are invoiced at the selling price. It would be obvious if the branch is debited with the sales price of the goods and subsequent to the debit being raised there is a change in selling price. The amount of debit either has to be increased or reduced in the consideration of the quantity of unsold stock that was there at the branch at the time of change took place. Right? We have to increase the sales amount or we have to reduce the closing stock amount to the extent of that one. Okay? That's what they are telling. Moreover, because the closing stock will be the value of selling price, right? It will not be measured at cost, right? Moreover, the amount of anticipatory or unrealized profit. Whenever we are preparing a final accounts, we cannot keep something as notional profit or unrealized profit, right? To that extent, we have to eliminate the profit. That's what they are telling here. Okay. Then it may also be necessary to adjust the value of closing stock on account of physical losses, pilferage, or wastages, which is nothing but the normal loss, abnormal losses. We have to for abnormal losses, we have to debit the profit and loss account, right? So debiting the cost of goods lost account and amount of loading to the branch adjustment account. There are three different methods again. What are they? Debtors method, stock and debtors method, final accounts method, debtors method. Under this method, the principal accounts that will be maintained are the branch account, the goods sent to branch account, and the stock reserve account. Branch account is the major account. Okay, goods sent to the branch account is like a stock account, and then stock reserve account is the loading, that is known as the profit, which is unrealized profit in the stock account, that is known as stock reserve account. Okay, because the goods and the branch account that will be in the selling price, right? So to the extent we have to make it as cost while preparing the financial statement, that portion of profit will be there in the stock reserve account. Entries in these account will be made in the following manner. Whenever the goods are sent to the selling price, branch account debit to goods sent to branch account. Loading will be removed from here. Goods sent to branch account, we will remove the loading. Okay, loading between the difference between the selling prices. Okay, goods sent to branch account to branch account. The returns will be same. Goods sent to branch account to branch account. Loading in respect of goods return, branch account debit to goods sent to branch account. Loading included in the opening stock. Opening stock for opening stock and closing stock, we'll put that amount in stock reserve for. Okay, we can't prepare final accounts every day, right? So for opening and closing account stock alone, we'll maintain it in stock reserve. For rest all, you'll adjust directly in the branch account. Loading included in the opening stock. Stock reserve account debit to branch account. Closing stock at selling price. Branch stock account debit to branch account. Loading included in the closing stock is reduced to the cost. So branch account debit to stock reserve account. Okay, what will happen? We will put like branch stock account. Like how do we do for debtors? Debtors minus bad debts minus PDD, right? Likewise, branch stock account in balance sheet we put branch stock account less stock reserve account, and the at balance sheet the stock will be shown at cost. Okay, hence the branch account. I'm sorry. Hence the branch account will not correctly show the trading profit of the branch unless the amounts are adjusted to the cost. Such adjustment is affected by the contract sent to branch account and stock reserve account. In respect of closing stock at branches for the purpose of disclosure in the balance, the credit balance and stock reserve account at the end of each year will be deducted from the value of the closing stock so as to reduce it to the cost, which will be carried forward as a separate balance for the following year being transferred to the credit of branch account. Now, we go to the next method, which is nothing but the stock and debtors method. Okay, here what we do is one additional account known as branch adjustment account will be prepared. Branch adjustment account. In addition to all the accounts are maintained under debtors method. Okay, on a cost basis. See, what we are going to do is we are maintaining stock and debtors method. We add these accounts, right? Branch stock account, branch debtors account, branch expense account, goods and branch account, branch cash or branch bank account, branch fixed asset account, branch profit and loss account. In addition to this, we are going to prepare one more account known as branch adjustment account. This adjustment will take care of the functions of the stock reserve. Okay. Similar to stock reserve in the detached method, we will have an account known as branch adjustment account. That's a simple understanding. Okay. So sale price of the goods sent from head office to the branch stock account at selling price, goods sent to branch account at cost, and then branch adjustment account with the loading amount. And then same reverse entry for return. Okay, cash sales branch cash account debit to branch stock account, credit sales branch cash account debit to branch stock account. Sorry, yeah, here. Goods returned to the branch by customer, branch stock account debit, branch debit account at selling price. Goods lost in transit, what will be done? Then goods lost in transit will be debited with the cost, branch adjustment account will be debited with the loading amount, and branch stock will be credited. I hope till this it is very clear, right? Let's move on to this. Closing stock. The balance in the branch stock account at the close of the year should be equal to the unsold stock at the branch valued at selling price. But quite often, the value of stock actually held at the branch may be either more or less in the balance of the branch stock account. In that event, balance in the branch stock account is increased or reduced by debit or credit to the goods lost account and branch adjustment account with the. So, if there is something being lost, then it will be goods lost account, and then branch adjustment account will be debit or credit for the corresponding adjustment with respect to loading. The stock account and selling price thus reveals the loss of stock and serves as check on the branch in this respect. Okay. Now, the discrepancy in the amount of balance the branch. Okay, why does there happen a difference between the value of stock which is being held and the value of stocks in the books? This can be because of 5 errors. Okay, five factors. One is that we are obtaining a wrong percentage of loading. Okay, we are thinking that it is gross profit of 25% and we are applying something, but it's actually 20%. Then we are applying a wrong percentage. Then goods having been sold either at below or above the established selling price. We are told to sell the goods at 50 rupees. We have told the branch to sell the goods at 50 rupees. But they have shown their efficiency and sold the goods at 60 rupees. Then there may be a difference. A commission to adjust the return or allowances. Physical loss of stock due to natural cause or pilferage. Errors in stock taking. Then rebates and allowances. I think similar to discount, right? Rebates and allowances allowed to the customers are debited to the profit and loss account and credited to the tax account because it is selling and distribution administration expenses are being debited to the profit and loss account. In the goods sent to branch account, the cost of the goods sent out to the branch for sale is credited by debiting the branch stock account. Conversely, the cost of the goods returned is debited to this account. As such, the balance in this account at the year end will represent the cost of goods sent to the branch account. Therefore, it will be transferred either to a trading account or purchase account of the head office. The amount of profit anticipated on sale of such goods sent to the is credited to the branch adjustment account, right? Whereas the unrealized the profit for instance that is being kept in the branch adjustment account. The balance in this account at the end of the year will be consisting of the gross profit which is being earned, gross profit earned or gross loss incurred on sales by the branch. On that account, it will be transferred to the branch profit and loss account. And last, elimination of unrealized profit and the closing stock. How are we going to eliminate it? The balance in the branch stock account will be of sale price, right? Therefore, it will be necessary to eliminate the element of profit included in such closing stock. This is done by creating a reserve against unrealized profit by debiting the branch adjustment account and crediting what? Stock reserve account. Okay, with an equal amount of difference in the cost and selling price of the unsold stock. So whenever selling price concept comes in, okay, whenever the stock is valued at selling price, enter both debtors and stock and detached method, we will at the year end and the opening, we will create an account known as stock reserve account. And okay, there it will be from some account to stock reserve account. Here it will be from branch adjustment account. Sometimes instead of opening a separate account in respect of a reserve, the amount of difference is credited to the branch stock account itself. Okay, instead of creating a separate account and putting as a difference, you will directly credit it to the branch stock account. In that case, the credited balance of such reserve is also carried forward separately, along with the debit balance of the branch stock account. Difference between the two would be the value of closing stock at cost. In either case, the credit balance will be deducted out of the value of the closing stock for the purpose of disclosure in the balance sheet, so that this stock is shown at the cost. Till this, I hope it is very clear. Now, moving on to the next one. An alternative method of elimination of unrealized profit in the closing stock. Now, what we said is that we will create a account known as stock reserve account, where we will post the unrealized profit at the end of the year, which will be transferred to the beginning of the next year also. This was the one method. We also have the other alternative, which is there, which states that where the gross profit of each branch is not required to be ascertained separately, although selling price is uniform, the amount of goods entered the branch is recorded only in two accounts, namely branch stock account and goods center branch account. In this method, at the end of the year, the branch stock account is closed by transfer to the balance representing the value of closing stock at sale price to goods center branch account. Okay. Let's repeat. In this method, at the end of the year, the branch stock account is closed by transfer of the balance representing the value of the closing stock at sales price to goods center branch account. It was entirely passed. So the effect of altogether eliminating the the value of stock at the branch. Now we don't have the value of stock at the branch, right? The balance of goods center branch account is afterwards transferred to the trading account representing the net sale price of the goods sold at the branch account. In that case, the value of closing stock at the branch at cost will be subsequently introduced in the trading account together with that of closing stock at the head office. Nothing but like the closing stock journal entry which we pass at the end of the year, right? We will just do a manual count and pass the entry of closing stock, right? This is what they are telling now. Okay. What thing you are just going to have only two accounts, branch stock account debit to goods center branch account. So at the end of year, what you do is goods center branch account to branch stock account. Now both accounts going to get closed, right? I mean, a branch stock account will get closed, and goods center branch account will have the net value of the sales which incurred in the branch account. Transfer this net value to the trading account. Now, will not have the closing stock and books. Now pass a journal entry, closing stock account debit, asset, that is closing stock asset account debit to closing stock trading, that is trading closing stock. Okay. By this, you are going to introduce both the stock, closing stock at the branch account and also the closing stock at the head office. Okay, that's what we actually do in the real-time scenario. Now, trading profit and loss account, this final accounts method. All items of memorandum, branch, trading and profit and loss accounts are to be converted into cost price if the goods are invoiced at the branch selling price. Other points will remain the same as already discussed in this method when goods are invoiced at cost. Only thing we have to do is we have to eliminate that notional unrealized profit. Okay, rest all will be generally as how we do the final accounts. We will do like that. Okay, there is no big change. We are very good at preparing the final accounts, right? So there is nothing new for us to learn here. Now, goods invoiced at the wholesale price. What are going to do when the goods are invoiced at wholesale price to a retail branch? Which means, let's take an example. Okay, the cost of the goods is 100. Okay, we are going to send the goods to the branch at 125, which is nothing but the wholesale price. But the actual price which are going to sell to the customer is 150. So to the extent 125 minus 100, this profit will be recorded in the head office. Okay, and the profit of branch will be 150 minus 125. This 25 will be recorded as the profit of the branch. Many concerns, therefore, invoice the goods to such shop at wholesale price and determine the profit or loss on sale of goods on this basis. So, branch stock account or trading account, it will be debited with the value of the opening stock at the branch. Price of the goods sent during the year at the wholesale price is credited by sales effected at this shop and closing stock of the goods valued at wholesale price. Okay. So, branch stock or trading account, what we will generally have? Generally, you will have the opening balance and the purchases, sales, and closing stock. That's the same thing. Okay. Now, the value of goods lost due to accident, theft is also credited to the branch stock account. This is nothing but the abnormal loss, right? Abnormal loss will first be credited in the trading account, then will be debited in the P&L account. The value of goods loss, because we have to remove that from purchases and then charge to profit or loss account. Okay, the value of goods lost due to accident, theft also credited to the branch stock account or trading account calculated at the wholesale price. At this stage, the branch stock or trading account will reveal the amount of gross profit or loss. Amount of gross profit or loss is to the branch profit and loss account. On further being debited the expenses incurred at the shop and the wholesale price of goods lost, the branch profit and loss account will disclose the net profit earned by the branch. Okay, so what are we going to do here? It is that we are going to credit the abnormal loss account at wholesale price in the trading account. Then we will debit the same in the profit and loss account. Then we will arrive after charging all other expenses, branch related expenses, we will arrive at the branch net profit. Since the value of closing stock at the branch has to be valued at its wholesale price, it has been necessary to create a stock reserve equal to the difference between the wholesale price and the cost. Like we had selling price and the cost, we are creating a stock reserve. In this method, we will create a stock reserve to the extent of wholesale price and the cost by debiting the amount in the head office profit and loss account. This stock reserve account is carried forward to the next year and then transferred to the credit side of the profit and loss account. Okay. Now, accounting for independent branches. Independent branches, what do we mean? Independent branches means the accounting records are maintained at the branches separately. Okay, they are not maintained in the head office. Branch maintains entire books of accounts under double entry system. Branch opens its books a head office account to record all the transactions that takes place between the head office and the branch. The head office maintains similar account, that is branch account, to record all the branch prepares its trial balance, trading and profit and loss account at the end of the accounting period and sends a copy of these statements to the head office for consolidation purposes. After receiving the financial statement, the head office reconciles between the what they do is they will first generate a head office account, ledger account, and then this will be shared to the head office. They will check whether the balance is matching with that whether the branch account in their books, if both are matching, then it will send a final account for the purpose of consolidation. Head office pass the necessary journal entries. If there are many, if there are some entries which are missing, then it will incorporate those entries. The branch trial balance with that of head office branch balance. The head office account in the branch books and the branch account in the head office book is to be maintained respectively. We have to maintain two different accounts. When dispatch of goods to the branch by head office, branch account debit to goods sent to the branch account. What we do here? This is in the branch account debit to goods sent to the branch account. This is in the case of head office books. In the branch books, goods received from HO, that is purchases, to head office account. It's like purchases account debit to creditor account. Creditor's head office here. Purchase, given the name is nature is important, right? Name is not important, nature is important. So goods received from head offices like purchases. When goods are received, the reverse entry. Simply a reverse entry. Branch expenses are paid by the branch. Then there will be no entry in the books of head office. That is no entry. General expense entry in the branch. Let's make it very clear here. So this is gonna be branch. This is the entry in the head. Let me put it. This is head office account. The second one is branch account. I don't know how to write it here. Maybe I'll take a comment here. Like this is head office books, and this one is branch books. Yeah, clear? Now let's move on. Outside purchase made by the branch. Again, no entry in the head office books, and purchase account debit to creditor account in the branch books. Branch expense paid by HO. It is paid by HO. There's HO involvement. So branch account debit to bank or cash account. Expense account debit to head office account. Sales affected by the branch. So head office no entry. Sales similar branch general entry. Collection from debtors of the branch received by head office. Head office receiving. So cash or bank account to branch account. Head office to Sunday debtors account. Payment by HO for the purchase. So branch account debit to bank account. Purchase account debit to head office account. Purchase of asset by branch. If branch is purchased, there is no entry in the head office books, right? So Sunday asset or to bank or liability. Branch, but asset is retained by the head office book. Head office books it is there. So branch asset account debit to branch account. Head office account debit to bank or liability account. Depreciation, we are going to have this. So the reverse entry, branch account debit to branch asset account, depreciation account debit to head office account. With this we have the same depreciation entry, right? Branch and head office will be cancelled and depreciation to branch office account. This is the net entry. Understood? Yeah. Remittance of funds by HO to branch. Branch account debit to bank account to head office account. Remittance by branch to head office, reverse entry. Which means bank account debit to branch account. Head office account debit to bank account. Of goods from one branch to another branch. Recipient branch. This will be there only in head office book. In head office book, it will be recipient branch to supplying branch. Why? This is why, right? How is head office involved here? This is because for every entry which is incurring a branch, supplying and recipient branch will pass it to the head office account. Head office will reconcile all the things. all the accounts will not be maintained in the branch. Okay, so recipient account debit to supplying branch. This debit the receiver, credit the giver. So the recipient branch account debit to supplying branch account. Okay, in supplying branch, what is the entry will be passed? Head office account debit to goods sent to head office account. Goods received from head office account to head office account will be the entry passed in recipient branch. So this is the important one. Okay, maybe this will be tricky for us to remember. Okay, now the final result of these adjustment account will be that so far as the head office is concerned, the branch will be looked upon either as a debtor or a creditor. As a debtor if the amount of assets is in excess of liabilities, and as a creditor if the position is reversed. A debit balance in the branch account should always be equal to the net asset at the branch. Adjustment and reconciliation of branch and head office account. If the branch and head office accounts converse each other, do not tally, these must be reconciled before preparation of final accounts. We already saw the same, right? If there are independent books of accounts, then the reconciliation problem arises, right? If the branch and head office are having different books of accounts, then it should be reconciled before preparation of final accounts. Okay. What are the reasons for disagreement? What are the reasons for disagreement? There are 4 different reasons. Okay. 1 is that goods have been dispatched by the head office but it's not received by the branch. Okay. Or the other, reverse can also be possible. That is, goods returned by the branch to head office but is not received by HO. Okay. One can either be with respect to goods or other one can be respect to cash, amount remitted by the head office to branch or vice versa. Then receipt of income, some entries may be missing. Receipt of income, payment which are paid by the branch, paid by the HO on behalf of the branch, maybe must to be recorded in the books of branches. Let's see reason of disagreement. The balance of the head office account in the branch books and branch account in the head office book have to be tallied. Adjustments are made only at the point when the recording has been omitted in the case of the receipts, or another point where action has already been effected in these cases. Okay. With this, we will complete for this video. We will check in the part 2 for the other points which have to be kept in mind while preparing the branch accounts and also about the foreign operations. Thank you.